We in here, baby. It's the FOMC watch party. Let's see what Papa Powell, the Fed, is gonna do. Is gearing up. Look at these buys. They gearing up. They getting antsy. Hey. I took all my stuff off. Put it on real quick. All right. Let me see. I'll put this up top here. And then I'm looking for... All right, here we go. The news drop. Look at this volatility. Oh, look at this volatility. Woo, look at that. Yeah. This thing too crazy. Man, you trade this, you gotta have... I don't know. Look at this. It's not even... Look at everything jump. Look at this jump. Look at these... They don't even know what to do right now. Let's pull up the... Hold on, let's pull up the stuff. That actually, I mean, the volatility is crazy, yeah, but you took that short up at the top there, at 400 short, 60 points off rip. Sheesh. What are the statement? I wish I could see that report. K and Q. That's actually pretty mild though, considering. Yeah, you gotta, I didn't want to say it, but you gotta have, yeah. That's crazy. The market dropped to 0. Hey, I'm not a part of this though. Wow, man, it feels it's giving is about to take out these lows off of that, and I don't even see like what is the. Let me see. Oh yeah, we about to wipe out these lows real quick. Okay, well let's see here. Let's take a look at it on the bigger time frame. We do that. Nah, no action. This is just a watch party, baby. No action. Don't you try to tempt me into this. I will not be moved. I am what they call it, the immovable force or the immovable object. Don't try to come in here and tempt me to hop in this. let's just see. Let's look at okay. The low is 283 on the session so far. Let's get this off of here. You see my hand is on the mouse ready to push the button right now. FOMC statement. Oh, okay, interest rate decision right there. All right, they didn't. Hold on. Okay, hold on. They didn't change anything. Fed risk city comments are balanced. Don't expect cuts soon. Well, that's just somebody's opinion. Hold on. Give me a second. Let me find upcoming PBS NewsHour, upcoming. All right. So he'll speak at 1:30, 2:30 Eastern. I'll be in here waiting. Did anybody trade that? That's a good question. Anybody catch that? Mess around in the sim? Yeah, that is a good idea. That is a good idea. That wasn't really that actually wasn't even really a big. It was a lot of volatility, but it wasn't even a huge like dump or nothing. And it stopped at 309. 309. Oh yeah, that reset code for Top Step. If y'all need it. Oh. Oh, I didn't know Sherm hopped back in there. Yo, I didn't know you were in here. You traded that? Oh, okay. No, I didn't. I, I haven't done anything. What you mean? I'm innocent in this. I haven't touched this. My book map froze. That's just froze. Let me refresh. His stream froze. There we go. Nah. I mean, it wasn't that bad of a reaction, to be honest, for the numbers. It dumped a lot of volatility. It dumped to 309 and then kind of pushed back up to 370, and now it's just sitting at about 340. Yeah. The decision, they kept it the same. They didn't do anything. No changes. Which, yeah, I expected that though. Top Step over here learning. Yep. They learning from Big Brother Apex. I was like, that's an Apex level move right there. You doing nasty work. Okay, so they sold it at VWAP basically. No change. What were they expecting? I mean, you expecting a change? They're not gonna change this yet. This all depends on. This all depends. I said this all depends on where Powell takes it. His speech. Wait. You said as a free 100K account, Moxie? Oh, my bad. I forgot y'all. I had them. My bad. I had my desktop muted because I'll be listening to music. Alright.
Is the background coming in too loud or what?
They couldn't hear you before. They can hear you now. Yeah.
Yeah, unfortunately, I'm not in front of my computer right now, so that's a good thing.
Yeah, that's a good thing.
Well, I don't have an Apex account to gamble, so.
That's a good thing. You don't want to be in this.
But yeah, that is grimy that Top Step did release that reset code an hour before, giving you enough time to get it all set up so you can blow your account right again.
So you can blow it.
So I give them enough time to get it all set up. They might have to turn the computer on and log into their account.
Yeah.
Give them enough time to do all that.
Yeah. Oh shoot, I didn't even hold on. I guess I could take that off. Give him enough time, set it up. All right, he's ready to blow it now. FOMC. Nope, I didn't touch it. I said I wasn't gonna touch it. I'm sticking to my word. Didn't touch it. Oh yeah. I wasn't a part of that fire drill last time. Then did you have to fill out a form for that again?
Yeah, so I guess they had it to where they had to put in your username.
Yeah.
I mean, that code didn't work for you?
Nope. Because I ain't fill out the form, probably. And it's gone, isn't it? They took it away. It's still up there.
Oh, I thought you already fixed that already. Is my background coming in too loud or what?
For me, it's fine for me. I don't know. Chat, is his background too loud? Dang, Muhammad. I knew you were a market maker, Muhammad. I knew you were. You got in at the bottom.
Yeah, that's not no damn surprise. Market maker, Muhammad, the market maker.
You are a market maker. We knew it. Okay. You're the good market maker, right? Try to help us out. Help out the risk managers. Yeah, it's username, blood type, favorite color, what size socks you wear. Dang, JC, he took the gamble and won. I see. Of 10K. Oh, I know how you do though. I know your strategy. I know your strat. Full port, baby.
I ain't gonna lie. I probably would have full 42, baby.
I know you would have. I'm just sitting here. This is just the watch party. I wish. Shoot. Yeah.
Yeah, you only watch it for 2 seconds. It's like, oh shit, it's moving, it's moving.
It's moving. Hop
and you
in.
fumble into it.
Full port, baby.
That's fine. Yeah.
Yeah. Let me chill out. Let me chill out. Instant fills. Oh shoot. Ninja Trader froze. Yeah. That volatility.
Ninja Trader froze? I'm surprised. I expect that from Tradeovate.
Hey, chill out with the Tradeovate slander. We're people too. We have feelings too. Yeah, Rhythmic. I don't like Rhythmic at all. I'd rather take a CQG connection. But man, is this a bear flag on the 5 minute? Is this a bear flag? Is this a bear flag? That's what I feel like it wants to do. I could be way off though. No changes. No changes in the rates. 100%. Market came to life right now off of that. Man, that 400 short would have been great. Dang near almost 100 points. Almost 100-point drop. Yeah.
Yeah. Yeah, I'm glad I sat home. Or I'm away from my computer because I know I would have saw this movement and I would have jumped in. Something. A practice account or something. Just to get the I'm surprised you just didn't do that. Just getting a practice account. I would have jumped in my practice account.
Just to get it out of the way. I know, but
it's good that you didn't because I'm pretty sure the earlier session gave you PTSD.
Yeah, that's bad behavior anyway. Yeah, that's bad. Even if it is in the practice account, because then you get in a practice account, it's gonna make you want to FOMO into the real account. And
I mean, that's where the real discipline has to come in.
Yeah,
it's for the thrills, baby. It's just for the thrills.
The real discipline got to kick in at that point.
I mean, shoot, that practice account is a gateway drug. That's all it is. Like, just get in the practice account, get a few points, and then before you know it, you're up 10K in the practice account. And before you know it, somehow, some way, you find yourself in your regular account.
Yep.
Gambling.
Good evening. Yep. That's how it goes, baby. That's how it goes. I feel like this is gonna go down some more, though. I'm going down. 1 hour, 4 hour. How you looking 4 hour? Oh, wait. Yeah. That volatility, man. It's that volatility. Skipping orders, skipping fills. Yep, live accounts, they do raise the margins on you on high volatility news. Prop firms are like, man, we don't care. You want to blow your account? Go ahead and blow it. 50 to 30. That's a good 20
Can I get another order of ramen?
Oh. Later, bro. Later, John. Okay.
All right, he's coming out in 10 minutes. I wonder how the market's going to react. I wonder.
I feel like they dump it before he comes out. You know, don't they usually do that? And then once he gets in his groove, then they're like, oh, Powell, save the market. Pump it, Powell. Pump it, baby.
Yeah, I would think the algos would definitely, as soon as he walk up to the podium, sell their positions off. I would think the algos would do that. And then initially, and I guess whenever he starts talking, he says something, and the algos kick right back in and start buying. My bias is probably going to start selling, and then they're going to probably get bought up.
Yeah. That's usually how it go. Usually. Oh, I thought their Twitter had all the... Okay. Dollar weekend, S&P strengthened. Crude oil. Great futures traders keep bets. Fed's first rate cut to come in March. That's your bet. That's your bet, huh? Up, then down. I think. Just hit that boom. I mean, honestly. I would only. Yeah, nah. I ain't gonna say nothing. I'm gonna just be quiet. Let's look at the 15. The 15 is giving the warm and fuzzies on this. Good evening. Oh, the market's coming alive right now. It's alive. It's alive. Hey, I haven't done anything yet. I don't know what you're talking about. I haven't done a thing yet. I haven't done anything. I've been just looking at levels, looking at things like I said I would do. Yeah, y'all see it. I'm just looking at stuff. That's it. I'm looking at y'all try to tempt me here. I'm looking at this order book. I'm looking at Oh shoot. That's too funny. I know, I know. You want no. What time frame is this? 5 minute.
Yeah, this is. Let me look at it. Is it double bottom? Is that a double bottom at 15?
It's
Yeah, I think it
double
double bottom at 15, dude.
310. Yeah.
Yeah.
First one was 309, then 310, and then now, yeah.
Yeah, I'm looking at bookmap right now. I think this is gonna probably fly higher. Like I said, I think we pumped today. After the news, we pumped, and I think we just dumped the entire day tomorrow. But we will see. We will see. We will see. Let's let the charts do the talking. Let the charts do the talking. I had to leave. I had to literally get from in front of my computer so I don't FOMO into FOMC.
That's the way to do it though. That's smart. You're protecting your accounts right now. You can trade reaction tomorrow. You know, pre-market
Yeah.
will probably still, once once the session ends and comes back, they'll probably still be tripping off of this.
Yeah, I think to get into the best position tomorrow, you probably have to get in somewhere in pre-market because I feel. Yeah, my bad. I feel that the best position is gonna probably be in pre-market because I think the volume's gonna be really low tomorrow, leading up to Amazon, Apple, and Meta earnings.
Yeah.
Yeah, it's gonna be slow.
Uh, 32, yeah, that was like a good 60 points. I'm glad you got your 10K JC. That's what's up. I'm gonna throw a. I hope you secured
Yo,
that.
congratulations on that. Hey,
Yeah,
that's not house money. That's your money. Don't give it back.
yeah,
Don't give it back, man. Gamblers, you know how we go. When you make a lot of money at one time, we tend to give it all back because we felt like we ain't earn it for real. So let's try to hold on to that.
yeah. Please, for us risk managers out there, me included. Okay, so you got it back plus some. That's a good way. Good way to look at this. You got it back plus some. Another eval. Yeah. All right, let's see how it reacts down here. It gets to that 309, 310. $35 reset. Yeah. That 71% sucks though. Dang. Oh, okay. Oh, shoot.
Progress toward our dual
My
mandate
bad.
objectives. Inflation has eased from its highs without a significant increase in unemployment.
Is
That's
this
very good news.
pump it, pal, baby?
But
He said
inflation
good
is still too
news.
high. Ongoing progress in bringing it down is not assured.
Dang, look at all this.
Is uncertain.
Man, look at that, dude.
to
Oh,
assure the
dude.
American
Oh, I
people
definitely would have
that we
been.
are fully
Oh, I would have
committed to
FOMO'd into
returning
that.
inflation
I would have FOMO'd into that. Yo, look at that
Price stability is
pump,
essential
dude.
to achieve a sustained period
I mean, I would have been
of
at that
strong
double
labor
bottom,
market
but
conditions.
Yeah,
yeah, I would have
yeah,
took that. I would have
yeah.
took that.
I was just thinking about
Today,
that.
the
Yeah.
FOMC decided to leave our policy interest rate unchanged.
Yeah, this is why you need an
to
Apex
reduce our
account. Full
securities
port, baby.
holdings.
Full port,
Over the
baby.
past 2 years, we have significantly
Oh, I would have
tightened
been at
the
that double
stance of
bottom.
monetary policy. Our strong
Probably about
actions have
20, 30
moved our policy
contracts.
rate well into
Full port, baby.
territory. And we
20, 30
continue to
contracts.
monitor economic activity and
Yeah, I love seeing price action like this.
as labor
This is the
market
old
pressures
NQ we
ease
miss.
and progress on
She used to be like this all the
continue,
time.
the risks to achieving our employment and inflation goals
We missed the
Dang.
old NQ. Look at that, dude. Look at that, dude. Look at
monetary
that.
policy
We missed the old NQ.
No.
briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding.
Dang, and it's
at a
still
solid
going.
pace.
Yo, it's still
GDP
going. Yeah,
growth in
I'm
the
glad
fourth
I'm not in front of my
quarter
computer.
last year came in
Oh,
at
that would have got me.
3.3%.
That would have got me right there.
For 2023,
Oh.
GDP expanded at
Cool.
3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on
Dang.
investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months,
Yeah,
payroll
that's
job
look,
gains averaged
that's the price action we
165,000
love right
jobs
there
per
on the
month,
NQ. That's why we
a
trade her,
pace
baby.
that is well
That's
below
why we
that
trade
seen
her.
a year ago, but still strong. The unemployment rate remains low at
Yeah,
3.7%.
a couple of top
Strong
set
job
resets
creation
just
has
got
been
blown.
accompanied by an increase in the supply of workers. The labor force participation
They said we got
rate
them.
up on balance
We got
over
'em.
the past year.
We sent out
For
5,000
individuals
resets,
aged
and
25
4,500
to
of them blown
54
it. We
years.
got them.
And
We got 'em.
immigration has returned to pre-pandemic levels.
And you know what it is? Like, when
Nominal
I said that
wage
I
growth
am
has
not
been
getting another
easing,
reset, I
and
mean
job
that shit.
vacancies have declined.
Like, I mean, I was not going to miss this one
Although the
because I got a
jobs
couple of
workers
accounts that I got like 2 or 3 days to
labor
pass.
demand still
Yeah.
So,
exceeds
I mean,
the
that's,
supply
I got
available.
until like the end of this week to pass them. But,
Inflation has eased notably over the past
yeah.
year, but remains
Yeah.
above our longer run goal of 2%. Total
Yeah,
PCE
because
rose
this week I was
2.6%
thinking,
over
oh,
the
this week
12
is like,
months
damn,
ending
how
in
can I use
December.
that reset? How can I use that
Excluding
reset? Do I got an
volatile food
account to
and
blow
energy
so I can
categories,
use that
core
reset?
PCE
Like, dude, I was thinking, I
rose
was literally thinking that in the back of my mind. I'm not ever watching Top Step
Lower
TV,
inflation
and I'm not
readings
ever
toward the
getting
second
another
half of
reset.
last year are welcome.
Like,
We will need to see
I'm
continued
not doing
progress
it.
to build
And I mean it.
confidence that inflation is
Hey,
moving down sustainably toward our goal.
because I was literally thinking, I was like,
Longer-term
damn, I don't
inflation
got an account to blow.
expectations appear to remain
Use the reset.
as reflected
I've
in
got an
broad
account to
range of
blow.
surveys of households, businesses,
Like,
and
I literally was
forecasters,
thinking that.
as well as measures from
So
government.
I know that now that that reset code is psychological,
The Fed's
you got to think
monetary
about
policy
everybody that
actions are
just blew
guided
their
by a
accounts.
mandate to
Now
promote
they're going to buy some
maximum
more
employment and
because now they ain't got no more
stable prices
resets.
for the
They blew
American
that reset. Now they're going to
people.
buy
Clients
some
and I are
more.
acutely aware that high
Yeah.
inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate. And we're
Apex is
strongly
like,
committed
dang,
to
Top Step
returning
made us proud
inflation to our
today.
2%.
Shoot, we don't drop resets, but we would have done the same.
Over the past 2 years, we have raised our policy rate
Right
by
from the
5.25
Apex's
percentage
playbook.
points,
Right from the
increased
Apex
security
playbook.
savings by more than
Got him.
$1.3 trillion.
We got him.
Because I mean, dude, it's hard not to see it that way because they could have released it on Monday, but they chose to release it on FOMC Day an hour before. Get on out of here, dude.
Yeah.
Everybody saw that one coming.
At
Yep.
5.25 to 5.5%.
I thought that they was actually going to wait until the end of the day to release it, so nobody can say that, oh, I blew it gambling FOMC, but nope, they did it an hour before.
And that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. The economic outlook is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We will continue to make our decisions meeting by meeting. We remain committed to bringing
Now we just listening to Powell.
goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our questions.
Gina Smilek from the New York Times. Thanks for taking our questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence.
Yeah.
It has been increasing, but we want
Yeah.
greater confidence.
Oh, look at that go.
Good data. It's not that we're looking for
Look at it
better
go.
data. We're looking at
Oh.
continuation of good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data.
Yo. Hey, yo. Oh.
It's sending us a true signal
Oh.
on
Muhammad, I should have. Ah.
2% inflation.
No.
The answer will come from some more data. That's also
No.
good data. It doesn't. It's not that the 6 months
No.
low enough. It
Baby,
is
come back.
Can we take?
Don't leave
Baby,
me.
come back.
No.
That's really what we're thinking.
Yo, Muhammad in this.
How many contracts are you long, Muhammad? How many contracts? 100 points.
Strong growth.
He just got 100 points.
Very strong growth.
Hey, yo.
The fourth quarter.
Yeah, I would have been in this. Yo, I would have FOMO'd into
Yet
that.
we've had a very
No,
strong
that's a
labor
FOMO
market.
play right there.
Oh.
I would have
So
switched to the
I think whereas a
XFA
year
and
ago
FOMO'd
we
into
were
that.
thinking that we needed to see something.
I mean, I would have been at the bottom.
That hasn't
Pump
But I
it,
would've FOMO'd into
pal.
that.
So
Pump it, pal.
we look
Hey,
at,
we
look
talked
at
about
stronger
this.
growth.
Yo, Powell pumps
We
it.
look at
Don't
it as
ever
a
short
balance
Powell,
at
man.
this
He
point. We
pumps
wanna
that
see
shit,
strong
man.
growth. We wanna see strong
He pumps it.
We're not looking for a weaker labor market.
100
We're looking for
points.
inflation
Muhammad.
to come down as it has been.
Hey, yo. I went long, but I got punked out. You know I always get punked out. Because I was long kind of high though. It was kind of high.
No, I think it's. I would
Hey,
say.
baby, I don't kiss your mama.
It seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation.
Muhammad. Oh man.
You can look behind those.
Wow.
And see that a lot of it's been coming from
100 points just like that. Don't tell me you went like 35, 50 contracts too.
that over time.
Oh.
Flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition.
Oh.
We just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing, and that tells us that we are on, gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick Timmeros of the Wall Street Journal.
Woo.
Chair Powell, it seems to me you raised rates rapidly over the last 2 years for two reasons. One was the risk of a wage price spiral. Two, there were risks of inflation expectations becoming unable.
Yo, is this one of those things where you
The report
just
for the fourth quarter shows private sector payroll growth running at a sub 4%.
63 points,
Inflation
25.
expectations are very close to where they were before the inflation
Sheesh.
of the last 3
Where do you
years.
see your top, Muhammad? Where you see? Oh shoot, that's the highs right there. That's the highs coming up right there. What the freak? Hey, yo, no way. We just.
Policy rates above 5%. Are you really going to learn more waiting
I'll
6
bump
weeks
that.
versus 3 months from now that you have avoided those two risks?
So, as you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And for partly for the reasons that you say, you know, we feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down to 2%, so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we
Gained weight. Where's your target? Where's your target?
coming down
Where's your target, baby?
sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or its variants. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our Teal book, and they're in all the materials that we look at. But, you know, I don't think we've ever been at a place where we were setting policy by them. And there, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is implicitly is so in theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all because, for one thing, we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around for to see the economy turn down because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
Hi, thanks, Chair Bell. I'd like you to key in on the use of the word in the statement that inflation still remains elevated. You've pledged to cut rates before inflation reached 2%. So that it would some sort of intermediate step here on inflation, and that a cut would be consequent with a change in the statement language that inflation remains elevated. What's the step down from there?
Yeah, I don't know that we worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline, and the case is likely that it will continue to come down. So that's where it is. But we're wanting to see more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in employment also bring you to the point of cutting rates?
Yes. So let me say that we're not looking for that. It's not something we're looking for. But yes, if you think about, in the base case, the economy is performing well. The labor market remains strong. If we saw an unexpected weakening certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher or those sorts of things would argue for moving later. In the base case, though, where the economy is healthy and we have ongoing growth, solid growth, we have a strong labor market, we have inflation coming down, that's what people are writing their SEP around. And in that case, what we're saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
Claire Jones, Financial Times. Just to circle back to the greater confidence aspect of the statement, there's been a lot of unanimity in recent meetings. I'm just wondering, going forward, when it comes to all needing greater confidence, is the unanimity, or at least consensus among FOMC members, about what the threshold for that greater confidence is? And if not, could you maybe tell us a little bit about the discussion today on, what the variations between FOMC members was on what constitutes enough confidence to cut rates, and also if there was any variation on how quickly that greater confidence threshold could be reached. Thank you.
We're not really at that stage. There was no proposal to cut rates. Some people did talk about their view of the rate path. I would point you to the SEP as good evidence of where people are, although it is one cycle later. So, we're not at a place of really working out those kinds of details because we weren't actively considering moving the federal funds rate down. I will say there is a wide disparity, a healthy disparity of views, and you see that in public statements, in the minutes and the transcripts when they're released every 5 years. So we do have a healthy set of.
Yeah, that is crazy, man. That is crazy.
Good policy. We're also able to reach
Super crazy.
because we
Super
listen to each
crazy.
other, we
I'm so glad I was away from my
not
computer.
everybody loves
Oh man, I was so glad. I would have FOMO'd. Dude, you see that pump? I would have been into that double bottom. I ain't gonna lie. I would have been in at that double bottom, and I
Damn,
would have held.
you'd have been a
I was gonna
happy.
I was gonna delete the target. I was gonna delete it.
So over the past
You'd have been a
Because with
happy.
Powell, anything is possible.
Anything's possible, baby.
With Pump It Powell, anything is possible, baby. Anything.
And I'm wondering at the start of this year, what might be
And
on that
shoot, you
dashboard
said Muhammad was in this,
the clear
was in it
picture of the
with 1
economy.
million contracts in his personal account.
On that.
including
Rent.
Million cons in his personal account. You know
So
it.
we're not,
Well, actually, he's a market
it's not
maker,
the
so
pandemic,
he plays with
so we can
everybody's
actually
money.
rely on more
He's like, yeah.
traditional, forms. People are working, they're getting wages.
See, I'm
the
gonna,
economy is largely
dude. There's like a whole stop sign right
broadly
there, dude.
normalizing, as you
But
see.
he was like, yeah.
So I wouldn't say we're looking at.
I'm just gonna
that-
pump the
that
market
sort of
here.
more
This is where I wanna
innovative
go long
data
at.
as much. You know, you point to
Muhammad, the
rent,
market
so
maker.
of course we follow the components of inflation very carefully, which would be goods inflation. I talked about that a little bit. You mentioned housing inflation. So the question is, when will these lower market rents find their way into measured rents as measured in PCE inflation? And we think that's coming. And we know it's coming. It's just a question of when and how big it'll be. So, but that's in everyone's forecast, I would say.
That's back at the
So that will
open.
help. But at the same time, we think goods inflation will probably, it's been giving a lot of disinflation to the effort, and probably that declines over time, but it may well have some more time to run. You know, the supply chains are not perfectly back to where they were. In addition, it takes time for the healing process to get into prices. So there may be still a tailwind. We'll find out with that. So we look at the things that relate to our mandate very carefully, and as you would imagine.
I guess just as a quick follow-up, do you feel comfortable at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, core inflation is still well above target on a 12-month basis. 12 months is our target. Certainly, I'm encouraged, and we're encouraged by the progress, but we're not declaring victory at all at this point. We think we have a ways to go.
Thank you, Mr. Chairman. You've said that you would know the neutral rate by its works. So I'm wondering what you could tell me. How do you believe the neutral rate is working? We're telling you right now that growth is stronger. In other words, how much is the economy really being restrained right now by the current funds rate? And how much restraint does it really need additionally if inflation is still coming down?
So I think you do see in the interest-sensitive parts of the economy, you do see, for example, housing. You see the effects. You do. Your second question, though, really I think is important, and that is a lot of this has come through. A lot of the disinflationary process has come through the healing of supply chains and also of the labor market. So you've seen that other set of factors is really different from other cycles and has brought that, working with tighter policy, which has enabled the supply side to recover, I think is that mixture has been behind what has enabled this. So no, we really do think that we're having an effect broadly across the economy. I would point to the interest sensitive parts of the economy as well as spending generally. But it's a joint story. It's a complicated story.
But how much restraint are you actually imparting to the economy, would you say, relative to the neutral rate?
So I think it's of course that it's not something you can identify with any precision. But a standard approach would be to take the nominal rate, 5.3%, let's say, and subtract sort of a forward measure of inflation. If you do that, and there are many, many ways to calculate that neutral rate, but that's one I like to do. And you're going to get to something that is materially above mainstream estimates of neutrality, of the neutral rate. You will. But at the same time, you look at the economy and you say, this is an economy that grew 3.1% last year. And you say, what does that tell you about the neutral rate? What's happening, though, is the supply side has been recovering in the middle of this. So that won't go on forever. So a lot of the growth we're seeing it isn't just a tug of war between interest rates and demand. You're getting, more activity because of labor market healing and supply chains healing. So I think the question is, when that peters out, I think the restriction will show up probably more sharply.
Thank you. Sorry. Thanks for taking the question, Mr. Chairman. You mentioned earlier we're not seeking a weaker labor market. I think you said. Can you talk a little bit more about that? Do you think the labor market now is back to quote unquote normal, and that we can achieve the inflation target without wage gains coming back down to what they were pre-pandemic? Even with today's ECI levels, they were still above those pre-pandemic levels.
I think the labor market, by many measures, is at or nearing normal, but not totally back to normal. And you pointed to one or more of them. So I think job openings are not quite back to where they were. Wage increases rather are not quite back to where they would need to be in the longer run. I would look at it this way, though. The economy is broadly normalizing, and so is the labor market. And that process will probably take some time. So wage setting is something that happens. It's probably will take a couple of years to get all the way back, and that's okay. That's okay. But we do see. You saw today's ECI reading. The evidence is that that wage increases are still at a healthy level, very healthy level, but they're gradually moving back to levels that would be more associated, given assumptions about productivity, are more typically associated with 2% inflation. It's an ongoing process, a healthy one, and I think we're moving in the right direction.
So that process can continue without a weakening of the labor market, basically, you're saying?
Well, I think the labor market is, I don't know if it's rebalancing. Clearly, there was a fairly severe imbalance between demand for workers and supply at the beginning of the pandemic. So we lost several million workers at the beginning of the pandemic from people dropping out of the labor force. And then when the economy reopened, you remember 2021, you had a severe labor shortage, and it was everywhere. Panic on the part of businesses, couldn't find people. So what's happened is we expected the labor market to come back quickly, and it didn't. And 2022 was a disappointing year, and we were kind of thinking, well, maybe we won't get it back. And then 2023 we did, as you know. So labor force participation came back strongly in 23, and so did immigration. Immigration came to a halt during the pandemic. So those two forces have significantly lowered the temperature in the labor market to where it's still a very strong labor market. It's still a good labor market for wages and for finding a job, but it's getting back into balance, and that's what we want to see. And one great way to look at that is what's happening with wage increases, and you see it now across the major things that we track. It isn't every quarter, but overall there's a clear trend, still at high levels, but back down to what would be consistent with where we were before the pandemic and with 2% inflation.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to follow up on Rich's question. It sounded like you suggested that you're not worried about faster growth so much. So wanted to see if you're seeing anything that suggests that inflation could reaccelerate from here. And it sounds like you're saying you're not worried that solid growth from here on out poses any risk to inflation. Thank you.
No, I think that is a risk, the risk that inflation would reaccelerate. I think the greater risk is that it would stabilize at a level meaningfully above 2%. That's to me more likely. Of course, if inflation were to surprise by moving back up, we would have to respond to that, and that would be a surprise at this point. But I have to tell you, that's why we keep our options open here and why we're not rushing. So I think both of those are risks, but I think the more likely risk is the one that I mentioned, which is you've had 6 good months, very good months, but what's really going to shake out here? What will, when we look back, what will we see? Will inflation have dipped and then come back up? Are the last 6 months flattered by factors that are one-off factors that won't repeat themselves? We don't think so. We don't. That's not what we think. But that's the question we are asking. We have to ask, and we want to get comfort on that.
And just one quick follow-up. Governor Waller had mentioned the revisions that are coming on February 9th for the CPI data. Is that something you're watching as well? And if we see those revisions fairly minor, is that going to give you more confidence where things are going?
We'll just have to see. Yeah, we'll look at those. Last year was a surprise.
Michael McKee, Bloomberg Radio and Television. If you don't want to use the term soft landing, would you say at least that from your point of view now, the other scenario of a hard landing caused by the Fed is off the table, or the risks have diminished very much? And you mentioned below 2% inflation on a 3-month basis. Core PCE has been running at 1.5%. And there are those on Wall Street who think that if you maintain the level of restriction you have right now, you could end up with inflation running below your target. How do you see that?
So your first question, how to describe where we are. So I guess I would just say this. Executive summary would be that growth is solid to strong over the course of last year. The labor market, 3.7% unemployment, indicates that the labor market is strong. We've had just about 2 years now of unemployment under 4%. That hasn't happened in 50 years, so it's a good labor market. And we've seen inflation come down. We've talked about that. So we've got 6 months of good inflation data and an expectation that there's more to come. So this is a good situation. Let's be honest. This is a good economy. But what's the outlook? That's looking in the review. The outlook, we do expect growth to moderate. Of course, we have expected it for some time, and it hasn't happened. But we do expect that it will moderate as supply chain and labor market normalization runs its course. The labor market is rebalancing, as I mentioned. Job creation has slowed. The base of job growth has narrowed. And, of course, 12-month inflation is above target and getting down closer to target. It's not guaranteed, but we do seem to be getting on track for that. So those are the risks and questions we have to answer. But overall, this is a pretty good picture. It is a good picture. Your second question was, sorry.
Could you get inflation that is below target, end up with inflation below target, and you have to do something about that?
So the thing is, we're not looking for inflation to tap the 2% base once. We're looking for it to settle out over time at 2%. And the same thing is true. If we have a month or two of lower, and we have that now, of inflation that's annualized at a lower level, that wouldn't be good. We're not looking to have inflation anchor below 2%. We're looking to have it anchor at 2%. So if we do face those circumstances, then
all right, I'm back in front of my laptop, baby. I missed the move. I missed the move up and down.
Situation.
Look at dude. What the? Yeah, I missed this move going both ways.
So as I've heard from some district Fed presidents, is it in your view a little premature to think?
Hey, Smith, you there?
Sheesh.
And then when we do see that first rate cut,
oh my gosh.
that is the beginning of a rate cut cycle,
Dude, I missed this both ways.
Oh,
okay, so this is what I'm looking at right now. This is a two-legged pullback. This is a two-legged pullback right here, dude.
Look at this, though. Oh my
hold
gosh.
on. Were you not watching this? Are you just seeing this?
Oh my gosh.
Are you just seeing this? You wasn't watching this?
I had stepped away for a second.
Yo, okay, dude.
If you take that,
dude, I might go
What the
long.
heck?
I just want to see how it reacts first.
What the
I might go
heck?
long.
We're going to be looking at this meeting.
What? Yo, look at this move. We made new
Are you still on
highs.
stream? Are you still on stream?
Yeah, I'm still on stream.
Yo, I'm dude. Mohammed, we need the confirmation.
Whoa.
That's to be seen.
Yo, that's crazy.
I
missed both. Man, I missed gone both ways, man.
Whoa.
All right.
I don't think.
All right. So does this 283 level hold? This 290 hold. This was the move right here. This level right here. Does it hold again? Does it hold? You know what? Fuck it, man. I'm gonna throw a contract on this.
The thing is, this is going to depend on
70. I think they want to make this a negative.
the outlook and the balance.
Yo.
I threw a contract on there. I'm putting this at 65. So let's see how this works out.
March meeting and
Let me see how it plays out.
It's really going to depend.
Because I mean, technically,
we talked about. There are risks
Technically,
that would cause us to go slower.
I mean,
for example, stronger.
we did
inflation,
rebalance
more
that area
persistent
right there.
There are risks
We
that
did
would
sweep
cause us
this
to
liquidity
be
right
rapid,
here.
would cause us to go
This
faster.
could be the
Or
retest of this
sooner, that
level
would be
right
weakening
here.
the
What do you
labor
think?
market,
What do
or
you
for
think?
that matter,
Man, I have
area
no
that
idea
causes
right now.
lower.
I mean, no one except Muhammad apparently has an idea. But
That's really the only way we can do it.
Sheesh, look at that. Oh my gosh. That is crazy.
Could you talk a little bit more about productivity growth?
Just in case
you
this thing
mentioned
launches right
multiple
here.
times about the level of wage growth that's consistent with
Crazy.
inflation. We've obviously seen, you were talking about ECI this morning, in which it's cooled a little bit, but still sort of.
Yo.
The growth has been very strong. How
He
much
gave us a high and a low. Exactly.
do you see that productivity?
Don't play with Pump It Power, baby.
Because of the factors
Don't play with Pump It Power, baby.
Your calls and your puts are done.
productivity growth will
They are
will
done
fade
skis.
over time.
So this is a really
You know
interesting
what? No, I'm gonna leave that there. I'm gonna leave that there.
Bro,
my own-
what did I
Come
say,
on, come on, buyers.
I think if you look back,
250?
Come on, buyers.
you saw a spike in productivity as
Buyers, dude. Buyers. Don't let me down.
And then you saw
Don't let me down, buyers. Don't let me down. Don't let
And
me
then over the
down,
last,
buyers.
You saw high productivity last year in 23. I think we're basically in the throes of.
Man, the buyers need to step the hell on up.
Economy. And
That's what they need to do.
will be, what is it that has changed? The productivity tends to be based.
Well,
on
I was up
fundamental
5K. I'm now probably like
aspects of
3K
our
right now.
economy.
They need to
Is there-
step
is
the
there
hell
a
up.
case- Will it be the case?
They need to step the hell up right
that
now.
More productive, more on a sustained basis, and I don't know. What would it take? It would take, people talk about AI, but
He mentioned
my
AI.
guess is
He mentioned
it
AI.
might shake out and be back to where we were.
AI, pump it, pump it.
Work from home doesn't seem like it's a big productivity increaser.
Dude.
Sheesh. But probably not in the short run. Probably maybe in the long run. So I'm not seeing why it would.
Dang.
Right now, I would say
We're not even at it. We're not at the 2% move just yet. We're not at the 2% just yet.
People in and out of the labor force and
Look at this dump. Oh my gosh. Oh my gosh.
We've seen such strong growth, but we've also seen inflation fall. That maybe there's just a higher level of productivity.
That's
right
one
now.
way to look at it. Yeah.
250.
Dude, the buyers just disappeared. Like, man.
250.
Buyers?
Nancy Marshall Genzer.
250.
I want to ask a little bit more.
So we hit
about
250, huh?
housing. I'm wondering how closely.
Dude, I'm scared to look at the chart right now, man.
Whether and when to cut rates, and it seems like housing prices are not coming down as quickly
Let me
as
see.
you expected.
I mean, shoot. I don't think. I mean, are we gonna catch a bid? Oh, okay. 232. 232 is the previous level. 232. So this could keep going until then.
We're not targeting housing price inflation, the cost of housing, or any of those things. Those are very important things for people's lives.
Man.
But they're not.
Sheesh.
We're also well aware that when we cut rates at the beginning of the pandemic, for example,
well, I guess we got the pump and the dump all in one session.
Oh my gosh.
Can be hurt because it's a
Hey, yo.
On top of that,
hey, yo, that's crazy.
Housing, we have a built-up set of cities and
just like that, baby. Just like that. Just like
There
that.
hasn't been enough housing.
It happened just like that.
These are not things that we have any tools to address. But where it comes into play very specifically in our work.
Should I take my profits?
Inflation, which is a combination.
Should I take my
it's really
profits?
rental inflation. You're taking owner's equivalent rent and then.
Nah, I want $1,000, baby. I want 1,000.
You're running that through.
I want 1,000, baby.
CPI.
Give me
And they
1,000.
just bought that up 40 points like that.
We look at. And what that's
Should I close it? 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 I'm gonna close it. I'm gonna close it. I'm gonna close it. 6K day, baby. No, keep on pumping. Keep on pumping. I'm gonna protect it. All right. 7K day, baby. 7K day, baby. 7K day, baby. 7K day. Dude, I was down 3K just now. Dude, I was down 3K just now.
Job Congress has given us.
If it wasn't for that pump,
price stability and maximum price stability.
Dude, that pump just saved me, dude. I was down 3K. And it looks like it'll still go.
Mostly for people at the lower end of the income spectrum who are
All right. So basically, I broke even with a little bit of profit.
Someone like that,
That's
high
basically all I
inflation,
did today.
About in the necessities of life, right away you're in trouble. Whereas even middle class people have some scope to absorb higher costs. So we have to get, it's our job, it's what society has asked us to do, is to get inflation down. And the tools that we use to do it are interest rates. So that's how we think about that.
Courtney Brown from Axios. Can you give us some insight into whether the committee discussed the possibility of slowing balance sheet runoff in the months ahead?
No.
Yes. So I would start by saying that balance sheet runoff so far has gone very well. And as the process has continued, we're getting to that time where questions are beginning to come into greater focus about the pace of runoff and all that. So at this meeting, we did have some discussion of the balance sheet, and we're planning to begin in-depth discussions of balance sheet issues at our next meeting in March. So those questions are all coming into scope now, and we're focusing on them. But we're at the beginning of that process, I would say.
Quick follow-up. Is it the case that the Fed would decide to lower rates and make adjustments to the balance sheet runoff in tandem?
Yes, we do. We see those as independent tools, and so they don't. For example, if you're normalizing policy, you might be reducing rates but continuing to run off the balance sheet. In both cases, that's normalization. But from a strict monetary policy standpoint, you could say we're loosening and one with tightening. So that could happen. It's not something we're planning or thinking about, but right now we're thinking about getting to a place where we're going to see the balance sheet runoff to continue. We're watching it carefully, and as I said, we'll be looking into that as a committee starting in March.
Thanks.
Simon Urbanovich with The Economist. Thank you, Chair Powell. You've mentioned 6 good months of inflation data, but that not being enough to build up confidence. Based on your previous response that your base case is you probably wouldn't start easing yet in March, the implication is that 8 good months might not be enough either. Roughly how many months do you think you might need of good inflation data to be confident?
Yeah, I'm not in a position to put a number on it. I'm just going to say, it's not that we don't have any confidence. We have growing confidence, but not to the point where we feel like it's a highly consequential decision to start the process of dialing back on restriction. And we want to get that right. And we feel like the strong economy, strong labor market, inflation coming down, it gives us the ability to do that. We think that's the best way we can serve the public because ultimately we've made a lot of progress on inflation. We just want to make sure that we do get the job done in a sustainable way. That's how we're thinking about it. In terms of when that'll be, that'll all come out of our communications, and we won't keep that a secret.
Hi, Chair Powell. Evan Reiser with M&I Market News. Can you explain a little bit more on what you're considering when tapering QT? Do you need to see the overnight reverse repo facility all the way down to zero, or is it something that you can start with a couple $100 billion there?
Not a decision that we've made, but I wouldn't think we wouldn't be taking a position that it's got to go to zero. I mean, if it were to stabilize at a different level, but that's not a decision that we've made. That's what we'll be talking about at the March meeting. A whole range of issues will be briefed up, and the committee will get into all of the issues that will be arising over the course of the next, let's say, year or so.
Greg. Thanks, Greg Robb from Market Watch. Chair Powell, I want to change gears a little bit. In the presidential primary campaign that's been going on for the last 9 months or so, your name has come up often, and many Republican candidates had said that they probably wouldn't want to give you a third term. So I wanted to give you a chance to talk about that. Do you want another term? You've had on the Fed. What's your stance on that?
I don't have a stance on that. It's not something I'm focused on. Focused on doing our jobs. This year is going to be a highly consequential year for the Fed and for monetary policy, and we're all of us very buckled down, focused on doing our jobs.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance.
as you mentioned, core PCE has been running at 1.9% over the past 6 months. And you guys are actually expecting core inflation higher this year at 2.4% compared to that 6-month measure. Given that forecast and that the median is for 3 rate cuts this year, what happens if inflation stays where it's been over the last 6 months for the next 6 months?
So we'll update our inflation forecasts at the next meeting. You referred to the December meeting. That's 3 months old, so it might be lower now given the data we've gotten. So look, as I mentioned, we're going to be reacting to the data. If we get very strong inflation data and it kicks back up, then we'll go slower or later or both. If we got really good inflation data soon, that would matter for both that would tell us that we could go sooner and perhaps go faster. So we're just going to be but of course we'll weigh that with all the other factors. We're setting policy based on the totality of the data.
But just to follow, if inflation stays where it is currently, that would probably mean that the real interest rate becomes more restrictive. Would that mean you'd have to trim more, perhaps, than you already have factored in?
Well, I think if we came to the view that that the 6-month inflation numbers, which are very close to 2, were in PCE world, if we thought that is really where we're going to be, then yes, our policy would be in a different place. It would. But that's the whole point, is we're trying to get comfortable and gain confidence that inflation is on a sustainable path down to 2% or toward 2%.
Hi, Chair Powell. Daniel Davis, Agence France Presse. I just wondered if I could get your comment on the recent consumer confidence data. It seems to suggest that consumers are sort of moving towards a much more optimistic view of the economy. I just wonder, is it fair to say that they're moving towards where the Fed appears to have been in recent months? And do you think that inflation and falling inflation perhaps has played a role in that? And what challenges do you see going forward? Thank you.
Yeah, so it's been interesting that confidence surveys have been weak at a time when unemployment has been low, very low, historically low for a couple of years. But nonetheless, that's been the case. And we've asked ourselves why that is. And one obvious answer, we don't pretend to have perfect wisdom on this, but one obvious answer is that the price level is high. So prices went up much more than 2% per year for a couple of years, and people are going to the store and they're paying much more for the basics of life than they were 2 years ago, 3 years ago, and they're not happy about it. And it's fine that inflation's coming down, but the prices they're paying are still high. So that is what that has to be some part of why people are unhappy, and they're right to be unhappy. This is why we need to keep price stability. It's why we need to do our jobs, is so that people don't have to deal with things like this. In terms of you're right. In recent surveys, you've seen a couple of.
Oh shoot!
In
my gosh! Yo,
or happiness.
Yeah,
I brought that mess back barely by the skin of my teeth, just scalping in and out.
There's some evidence of that. But you're right, it is a fact that we have
in and out.
Did you jump into your? Yes, you did.
Yeah, I did.
Yes, you did. Dude, how many times is the NQ going to be merciful to you before you get it? Dude, I was down 3K, dude. I was down 3K. That was basically all my goddamn profits I made today. And then with that pump, I was able to get some of that back. Plus, so I'm in the day at 7K today. But I didn't think she was gonna take it down like that. I didn't think she was gonna take it down like that.
Dude, well, shoot, yeah.
Hey, chat.
That's
risk
crazy.
Managers. Remember, it's supposed to be a watch party. It was just supposed to have been a watch party.
Hey, chill out. Oh, I wasn't paying attention. Oh.
What is it doing? Is it pumping?
Okay. Oh, I gave it all back again.
Hold on, what are you doing? Yo, he needs an intervention.
I need an intervention.
He needs an intervention.
I need an adult.
They're talking to not just the business community, but the educational, medical, nonprofit community. they have arms into all of that. And so when they come back, that's what goes into the
Dude.
beige book. But that they come back.
How
and
many,
what each
dude?
Reserve Bank
She said,
president does
"Nah,
is
Brandon, I'm tired of your ways, man. I'm tired. I ain't coming back this time."
Oh, dang.
They will give you input.
I'm tired of your ways.
That they've had with people of all different walks, and it's
You
I
got back
personally
in?
find it
Yo, that's
very
crazy.
helpful in
Yeah, this supposed to be a watch party.
I know. I'm not off the high.
show up in the data sometimes.
I'm not off the high.
Did any of them notice slowing economy?
Oh, what the freak? And look at that.
Yes, I mean if you look back at the last, not this page.
Yeah, I learned my lesson.
before,
I learned my lesson, dude. When I was down that 3K, I was like, dude, baby, if you allow me to get out of this, I'll get out of this.
Not in every district.
I've really changed my ways.
Overall, it feels like
my ways have been changed.
Dang.
Thank you, sir. Jeff Cox from CNBC.
Oh.
I'm kind of looking to.
You couldn't just let it lock in, huh?
You talked about.
I know. Why can't I let it lock in? What's wrong with me?
3% annualized growth in the
Let it lock in.
Yo, that's hilarious, dude. That's hilarious.
More loudly to you now.
I need an intervention.
Threat might that you're in a position, in other words, to keep rates elevated as long as the economy stays strong, and you're more tilted towards that. And then also, perhaps, are you worried at all that the economy is maybe a little too strong right now, and that inflation could come back at some point?
I'm not so worried about that. It's again, we've had
Came
inflation
back.
come
That
down
mess popped up
without
to what, 90?
a slow
Oh,
economy,
shoot.
without important increases in unemployment, and there's no reason why we should want to get in the way of that process if it's going to continue. So, I am, I think declining inflation, continued declines in inflation, are really the main thing we're looking at. Of course, we want the labor.
Dude, 240?
We don't have a growth mandate.
240?
A maximum employment mandate and a price stability mandate, and those are the two things we look at. Growth only matters to the extent it influences our achievement of those two mandates. Thank you very much.
Thank you very much, pal. Papa pal. They were just waiting for him to be done.
I'm surprised you didn't jump back in there.
I was about to, but I didn't know what they were gonna do. I was waiting for the reaction of. Yeah.
Oh, okay. So, all right. Let's now that the gambling is out of the way. Whoa. It never ends with Apex. It never ends with Apex.
Yeah, I was about to say, is it out of the way?
Yeah, dude. Like, you got all them contracts, you got all that buying power. Yeah, it never ends. So, oh crap! It's 2:30. Dude, my time is off. I'm sitting there thinking it's like 12:30. I'm about to get ready to just start trading the afternoon session. It's 2:20, dude.
Exactly.
Yo, that's crazy. Yeah, so I don't expect it to do anything. I think we might get a last hoorah at the but I think it goes long here. I think if it breaks 317, because it seems like they're trying to keep that as a resistance. If they break that, close over it and retest, you can probably full port that and try to get your money back.
I don't think that's gonna work this time.
VWAP, but I think VWAP is going to get in the way of that.
Yeah.
The 200 EMA is at 340, and VWAP is at 360. So
that might not work this time.
You said what?
Said that might not work this time.
Yeah, you probably got how much in drawdown you got?
Like
you probably
nothing.
have to go back to micros, huh?
I would, but I don't want to do that.
Yeah.
I don't want to do that.
Yeah. Yeah, so I got an eval, a top step eval that I got like 2 or 3 more days on it. So let's see if I can get it done. So tomorrow and on Friday, I'm going to try to get the 4,500 on both accounts because this one actually expires on the 5th, and the 5th is that Monday. So, and it's not, I'm not getting it rebuild. I will only rebuild this one
No, I'm not rebuilding that shit. No, no, I'm not doing that. I got Thursday and Friday to get $4,500, baby, on both days. So let's do or die, baby. Because I'm not getting rebuilt on that one. Dude, look at that pump, dude.
Yeah.
Where was you at?
Yeah.
Where were you in at initially?
Man, I don't know. I was all over the place scalping.
Yeah.
It
Let's see what the CL did today. Let's see if she broke my heart on purpose. Oh, damn. God damn.
CL broke your heart?
Nah. I thought she was, nah. You look, CL trended down. And this is why I say if you are a technical analyst, CL is the instrument for you. This is a perfect downtrend. Perfect downtrend, dude. She trended down in a perfect channel. CL's the perfectionist, man. She is a perfectionist. She likes to do things a certain way.
Yeah, she is. And she does.
She likes to do things a certain way. She gave back that whole move. You know what? Honestly, this is actually a good place to get long, actually. Too bad it's the end of the day.
On CL?
Yeah, 75, 50 is a great place to get long. It's a great place to get long. Actually, I might go long at open if I can get a retest of this level. 75.50 is a good level to get long.
Yeah, I just looked at it. I would agree. I would agree with that. I would agree.
You got literally almost a triple bottom on this, a triple bottom in this area. So obviously the bulls are here. It was previous resistance, and then it turned into support. Oh yeah, that's a great place to get long. Yeah, 75.50 is a great place to get long. Great place.
So should I wait? I probably should wait long this at the open. Because I think
I would look for a limit entry pre-market.
Yeah.
You know you gotta wait till London. You know you can't.
Yeah.
Unless you're scalping before London, you can't put on a position and hold that damn thing.
Yeah, you're right. You were right about that.
I mean, it does the same thing. At this point, the NQ, I mean, I imagined every scenario, and I was wrong every time. The NQ does the same shit every damn time. Man. It don't even do nothing different for real. It does not do anything different. And so now I'm at this point where I don't even use my imagination to trade CL anymore. I mean, not CL, NQ. It does the same shit. What did we say with Powell? He was going to pump it, and then he was going to dump it. I thought he was going to get the dump tomorrow, but we got that all in one session. We got the pump and the super dump.
Yeah.
It does that shit all the time. It's not even, he does it all the time. So it's like, I know what to expect with Powell.
Yeah, it's just all on timing though. When is it
you just got to time this right. Yeah.
When is it gonna happen?
Yeah, look at that two-legged pullback, yo. That was devious. That was devious. That's why I wanted to wait at that double bottom. You got a big move up. You got a two-legged pullback, and I know a lot of bulls because look at this stop run down. So I know a lot of bulls got because I was gonna get into this too. I was like, dude, this is a two-legged pullback, a big move up. This is a great place to get long at this bottom, but I was like, nah, this is Powell. Nah, let me wait. I got in at around 290. I got back in at 290. I had to scale back in at 266. I had one more contract at 250. And I was able to move my average entry down to about 270. And then with that pump, I was able to get about 2K to get out because I was down 3K, dude. And I was like, man, fuck that. Man. I was like, I did it again. I was like, damn it, I did it again. Oh shit. Yo, take that, dude. Take it. Take it.
What?
Take it. Take it.
He watched the stream. He's like, oh shit. Take
No, because
that.
like, dude, you're too quiet.
Take that.
You're too quiet. Take that shit, dude.
He looked at. You looked at the stream and saw it. Did it even?
Yeah, dude.
Oh shoot. That was surgical right there. Surgical work.
Okay, so if you want 200, I think this is going down.
Quick drop to the downside. Give me $200.
But it's sitting on top of the 50 EMA.
I could wait till we get the close and then everybody's like, it slows down a little bit more. You know what I mean? I don't know.
Yo, this man Smith literally made about 10, 12K in this one account, dude. You made about 12K in this account.
Well, let's see. Let's run it and see. 12K and lost 10. 12K and lost 10.
You made 12K in this account, dude.
That's sick. That's sick. Oh man. 12K but lost 10 though.
Just imagine if you kept all 12 of that K in a 3. I mean, you can only take out 2K, but still.
Yeah.
Okay, hey, I think
that would have been a good cushion.
I think the Bulls trying to hold it here. Let me see. How many points you need? All you need is for a full port of 10 contracts, all you need is what, like 2 or 3 points?
Shoot, just give me 5 points. That's all I need. Full port. 5 points, baby.
Yeah, you should have took that short. Yeah.
I should have took that.
Yeah, look at that. And don't fumble into it now. It already moved in. Don't fumble into it. Yeah, let's see if we get the continuation.
Oh, they rejected my. They rejected my order. No.
Dude, close it, dude. Close it.
No.
Close it. What the fuck? Yo.
They rejected my order.
Yo, that's why I don't fuck with Tradeovate, dude. That's why I don't fuck with Tradeovate, dude.
No.
It does that, dude. No way, dude.
Oh, shit.
Yo. Dude, that's crazy because you was there, dude. You was there.
Oh my gosh. Oh,
dude, close it.
It's done. The stream's a little bit delayed. Oh my gosh. Oh.
Yo, how much, dude? You're at 15K right now, dude.
Oh,
you're at 15K, dude.
Oh shoot, 13 gave back 10. 13 gave back 10. Okay, that's it, stream. We're gonna do this tomorrow. Gosh, look at this. Look at this. Look at that. Oh shoot. That would have been 79. Give me woo. All right.
Turn your mouse in. Turn your mouse. Hey, physical risk manager.
Hey,
confiscate the mouse.
Hey, I'm shutting down. I'm shutting down right now. I'm shutting down the computer. Hey, where y'all? You see this? Shut down. Shut down. Oh my gosh.
This man literally saved his account about 10. Dude, the NQ is never that merciful. She is never that merciful.
Oh my gosh. Can you just imagine if I had kept all of that though? Just kept all it, never lost the 10. Oh my gosh. Oh my goodness. Oh my gosh. Oh my gosh.
Yeah.
Whew. And it's still, I mean, I had a feeling the short was there, and like you said, when you were talking about it, I was thinking about it. And I just didn't react. Yeah, I just didn't react. Look at that. Look at that go. It's gonna.
Hey, you closed out, right?
No, I'm yeah. Let me make sure ain't nothing hanging out there. No limits. No limits hanging out. Oh, look at that move. Dang.
Oh shoot, let me do that real quick.
Oh my gosh.
Peekaboo.
Let's face it.
Oh, yeah.
Let's just face it. The NQ was merciful.
It's one
today.
hell of a draw. She was very merciful today. She was merciful to you today. You was going full port too. That's what's crazy.
Exactly. I had to get the drawdown back. I had to get it back. I had to get it back. Hey, thank y'all for coming into this watch party turned into FOMC trading session. Look at this drop though now. I was full port.
Yeah, dude. I
was full port.
Yeah, I saw it. I was like, yo, this is going short. And then when I was like, hey, like pay attention, like this shit's going short.
Yeah, I was looking and thinking about it. You were talking about it. You said it. Like, hey, this is perfect. Because what was that? That was at like 290, right? In the 290s. I was thinking about it. I was like, yo, is this the short? Like, that's what. Watch party slaughterhouse. We came. How many times did we come back from the dead today? Like 4 or 5 times. Yo,
enough for you to make 3K, 13K, and lose 10. That's how many times, too.
Yo. All right.
Yo, what did I tell you? Hey, what did I say before? I was like, dude, I need to get away from the computer because I ain't gonna sit here and play like I wasn't gonna jump in. I came home and jumped right in. Lost 3K, made it right back. Yeah, I was like, nah, yeah, I needed to be away from my desk for this one because I probably would have been, I probably would have been done today. Yeah, if the risk managers in the chat didn't learn nothing today, yo, a watch party is just a gateway drug. It's just the excuse to get you there. The NQ will do the rest. He'll do the rest. He's like, oh, he's gonna trade me. Let me just pump up 100 points with no price action. He'll FOMO into it.
You know I did too. And I'm still thinking, man, I wanted it to touch 500. I wanted 500 so bad. We got to 484. Yep, 484 before that reversal happened. Dang. Okay, I guess the NQ today was like, nah, we gonna try to get that 2% close. 334 points down right now. Wow.
Yeah, like yeah. She is a one hell of a drug, man. We all traders, so we all know the feeling, man. We know what she does to us. But yeah, that's all I got, man. I'm glad we all survived today. For those that survived, we survived to trade the NQ another day.
My name is Brandon, and I'm addicted to the NQ. All right, guys, that wasn't even. I didn't even have time to mentally process that, so I can't even say it was mentally exhausting because that mess happened so fast. I couldn't even process it mentally. But all right, y'all, that's enough for me. We'll come back tomorrow. Oh my gosh. Peace. Thank you for joining again. He said it was, yeah, I'm sure it was exhausting for y'all. I didn't even have time to process everything. Oh my gosh. It should be on pay-per-view.
It should
be. Oh shoot. Ding 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 ding. Alright, y'all. Yeah, we're gonna come back and we're gonna be much smarter tomorrow. I'm probably not gonna touch these. We're probably gonna hop into some more evals, get those to the funded side. We did.
Yeah.
Although it was wild, I was just saying one last thing. Although it was wild, we did what we came to do today, and that's take out that trail and draw down so it'll lock. All right, no more.
Yep.
We're gonna let it lock. Let it lock, baby.
Yo, you better be glad you want Trade Evade, because I think honestly, I don't think Apex got their Trade Evade auto liquidate on lock yet. Like I said, because there was times where it should have liquidated me and it didn't. So.
Yeah, I've had those instances too.
Yeah.
But all right,
but
y'all.
Yeah, dude.
Yeah. Go ahead.
No. I was gonna say that if price stays in this area, I'm gonna see. This is the double bottom right here. I'm gonna try to long this at open probably. I'm gonna long this at open. Yeah, I'm gonna long this at open. But that's all I got, guys. Enjoy the rest of your day. Peace out.
Yeah. Have a good one. Don't be like me. I say it all the time. Do not be like me. That was reckless. But fun, but reckless. And that's Apex for you, baby. That's the casino.
The casino, baby.
All right, y'all. All right. Peace.